Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, a lot to go over today in this video. First and foremost, the markets are trading lower. S&P down 5 points, Dow down 40 points, NASDAQ down 9 points. Now, the key here is to understand the weakness we saw yesterday. I commented to you guys on this yesterday. If you look at yesterday's action, right, one thing I mentioned in yesterday's intraday video was the aspect that the markets kept on hammering on this upper level right here, and notice how where they were hitting was just below the all-time high here on the 29th of November. And you did it 3 times, 1, 2, 3, and you never even touched that high, let alone pierced it. And I said to you guys, to me, that's a weak signal. Right? The inability for the markets to even come up to that level exactly, let alone pierce it, is a weak signal. And sure enough, by the end of the day, the markets had backed off, and we closed, off the lows, but definitely off the highs. Today, the selling has continued. Now, interestingly enough, we saw a trend line connecting this low through this low and right through the closing area yesterday. We gapped below it, and then we did a retrace. And notice the retrace right into that perfectly, and then the selling started. So a small gap down today. Buyers come in right to the technical level, and then the sellers come in. And right now we're hovering just off the lows of the day. But bottom line is this. I've been a stern, cautionary flag out there for those of you that have been watching this market, and I've been dead on. Bottom line is, over the last couple weeks, we've talked, even the last month or so, we've talked about the daily chart, how the markets can't go up more than 3% above the trend line that's upsloping. That's been dead on. And ultimately, we're seeing the weakness start to creep in this market. Whether or not we have a big pop like we did last Thursday and Friday, the markets just don't have the continuation energy to push further higher. And again, that's all a relation to the daily chart here. If you look at the daily chart of the S&P 500 or the SPY in this case, these upsloping trend lines that stretch back to 2010, 2011 into 2013 here, again, I've made this very clear. You can go above these by a little bit, but not by much. Not by much at all. And sure enough, it's a 3% band is what I've been using, and you've never gone more than really even 2% above these upsloping trend lines. And that's what the market's going to stay at. Right, even with the holidays. And that's the amazing thing about this, is that you have holidays coming up, and the markets usually trade higher on light volume, which we have very light volume today, very light volume yesterday, and we're not seeing that. Around Thanksgiving, same thing. We had insanely light volume, and the markets were really just flat. They weren't really much more than flat that whole week, which is very unusual and continues to show us the weakness out there. Now, I'm using this opportunity to accumulate some short plays, guys. There's some good long plays out there that we've accumulated as well, one being WPRT. And let me just show you guys this one. So we bought WPRT yesterday, and you just by naturally thinking, right, you'd be like, oh, well, I'm sure they're down on that position today. Wrong. All right, this was a trade from my partner, Nick Santiago, and he's the other chief market strategist here at InTheMoneyStocks.com, and beautiful surge up today, and it's still up on the day 50 cents. So that just shows you that a good stock picker, one that knows the PPT methodology, can make money both ways in this market. Now, this morning, I shorted IBB, which is the iShares NASDAQ Biotech ETF. So again, the whole thinking behind this is, first of all, biotech shares are topping out. They're the only ones that are in the epic bubble stage, which are reminiscent of the NASDAQ in the dot-com bubble. All right, this one sector. Now, other sectors, I believe, are well overdone and are due for a, 15-20% correction next year. But the IBB is actually due for it's a larger correction possibility there, because this is the one that, again, mimics the dot-com type chart. And you can clearly see that the biotechs, look at this run this year alone. All right, the biotech index was, at the end of 2012, 137 bucks. It hit a high a couple days ago of 225, and I shorted it around the 222 level, so we're already up about $2.50 to $3 just intraday today on this trade, and I believe it's going to have minor support at this 20, which you can see it kissed, and then this bearish pattern right here, see down move inside bear pattern, this will flush down easily down to this level, and I actually think you're going to go even lower. Short-term target, you have a trend line right here, which is right around the 200 level, and then you have another major level right here. This is your general target area when this thing washes out. Now, it may not wash out till January, but in the short term, you'll get some downside. But January is really where I expect more downside quickly, especially as funds start to exit these at the end of the year. Now, right now, into the end of the year, you'll see some profit taking on winning stocks, but a lot of funds will want to keep them on the books. So when they send their statements to their clients, they still show that they're holding Gilead Sciences, Amgen, Celgene. They'll still want to show that. But as soon as the new year comes and it doesn't matter anymore, these guys can't wait to get out. Right? They know. I mean, it doesn't take a genius to look at an ETF that tracks the biotech index and see the types of gains that we've seen. I mean, look at Celgene, for instance. Celgene, by the way, a couple dojis showing up, which is a good topping signal as well. Possible even a three-tail theory if we get another one tomorrow. But Celgene is up 100% in 1 year. 100% in 1 year, folks. Think about that. I mean, we're not talking about a small company. The market cap of this is $70 billion. Take a look at GILD. This stock is also up about 100% from approximately $35 to over $70. And this has a market cap of over $100 billion. So we're not talking about, John Q. Public small cap here. We're not talking about that. We're talking about companies that have some of the biggest market caps in the world, and they're doubling in 1 year. All right. Now, I'm not saying these companies don't have promise, but it's all about, financial money chasing performers. And at some point, you get to the point where it's overbought. In this case, it's a bubble. And so ultimately, I believe that the index, the biotech index, will come crashing down. I believe these stocks like Gilead will see the 200 MA. This is actually my target on Gilead, guys. You want to see my target right here? Right here. This area right in here. All right, this is where you're going to see a retrace in 2014 to the 58 level, which from 75 to 58 is a monstrous retrace. All right, it's 200 MA, pivot top, pivot low, pivot low right there. Now, there's a small chance it could go down lower, but right now, I mean, you would take a market crash to get it down here. Right now, if we just have a market pull back 10, 15, 20%, you'll see it in this area easily. All right, on Celgene, take a look at this. All right, Celgene making that little topping signal right there. Look at this extension move. All right, when this thing comes down, 200 is going to be easily taken out. What you're going to do is you're going to actually go below the 200. There's a major gap fill right here. That's first target, in my opinion, for the longer term move, and then you'll actually go down here. All right, these are your first and second target. 200 MA will be a small bounce area as well, but ultimately I think it goes through and fills the gap. All right, so that's, think about that, from $173, $74 to first target of $125. That's a huge correction. It's one of my featured things today. And again, I picked up the IBB, which we're up about $2.50 to $3 on, and this should easily, correction-wise, you're easily talking about these lower levels down to around the 200. That's in 2014. I think in the shorter term, you'll see about a 5% pullback off of this, which would be very nice as well, about a $10 drop on the IBB. A couple other stocks in motion today. Financials continue to be strong. I talked about this in the chat room, and you got the Volcker rule kicking into effect and so forth. And a lot of people were asking in the chat room, how come the financials are strong? And I said, well, because of the Volcker rule. And they said, are you kidding? That doesn't make sense. The Volcker rule is negative. Well, the fact is, the Volcker rule has some kind of shady print that to me is going to enable some of these financials to still get around certain aspects of it. And I'm sure that was done on purpose through lobbying efforts. But the point is that it's not as harsh as it could have been. So the market had priced in on these stocks a very harsh Volcker rule, while at least in the short term, it's getting a little reflex bounce. They're saying, oh, it's not as bad as I thought. And again, you can see it from the strength. Goldman's up $2.50 today with the market negative. So right there, very clear. All right, another outperformer is Baidu, BIDU, the Chinese search engine play. And again, this was your former double top right here. Former double top right up here. I scalped this today and had a nice shorting opportunity for about $1.10 on it off the 180 even number Pierce. But in any case, this stock I believe is probably going to $200. It's only about $20 away. That will be your shorting level. And once it gets there, again, should be a very nice level to pick up and play the short on. This stock is up tremendously today, up about $8. And the reason is because there's a lot of optimism coming out of China right now. A lot. I've been playing China small caps for quite a bit of time now over the last few months, and they've been hot. We've seen other Chinese stocks really outperform. Chinese markets doing a little bit better. There's a lot of positives there. Now, it could be all false, and we all fall. All these stocks fall apart later on, which eventually I think will happen. But right now, people are looking at the U.S. economy, which has been the driving force for the world, and the U.S. economy is doing better. We saw it in the jobs number. We've seen it in other economic numbers. All of that combined is leading towards people being very optimistic about China. If the U.S. is growing, the consumer is going to start buying big time again, and one thing leads to another, and that's good for China. All right, and again, right now you have the Fed meeting next week, and there is a decent amount of chatter that you could have some tapering going on. I'd say right now you have a 50-50, 60-40 chance of taper. All right, there are some presidents that are saying it most likely will happen. Not going to be a big amount. See, I mean, this is the key. They're not stupid, right? The Fed presidents, if they do taper, are going to taper out of the 85 billion they're printing every month. They'll print like 80 billion instead, or 75. I mean, they're going to do such a small amount that it's like basically, taking just a little bit away from the market. So the market this way won't freak out. And I mean, you are seeing some weakness creep in, but we'll see again in the coming days of more weakness. I think a lot will be determined by the size of the taper, if taper happens or not, obviously, and then what the comments are going forward. All right. But again, market looks like it's finally going to be attempted to take off life support. Now, I'll argue that I think if they do remove, I don't think they'll remove all of taper for a long time. I think you're literally talking at least a year plus, if not more, before they remove all of the taper. And that's not even talking about raising interest rates. I mean, raising interest rates doesn't happen until, I mean, I think the Fed has said like 2017 or something like that. So just be aware of that the market is kind of setting up in that respect for a potential taper. And I think that's why you're seeing a little weakness. You probably continue weakness into next week, and then we'll see if we get any sort of relief or continuation on the downside. Right now, again, spiders are just kind of holding steady here, bouncing around the lows of the day. And if we do fall, this was a little bit of a support I told the chat room today about. It was a perfect level. Look at that low print right there. You have a little minor level here, and the 200 would be another big level here on the SPY. Again, SPY is the S&P 500. All right, guys, I got to get going. But again, good stuff out there. There's a lot of trading possibilities, and that's what I like to see. Whether you want to go long, like in WPRT, or short as in the IBB, it's all there for you right now as this market is getting set. Now, again, with the holidays, we'll have to see if we'll get a big move before the end of the holidays. But really, if you think about it, it's only next week, and then you got Christmas to New Year's, and that's going to be a dead market, and then you got the New Year. And New Year's coming up fast, so be ready, folks. All right, on that note, I'm going to step aside. Have a great rest of the day. Come take the 7-day free trial here at InTheMoneyStocks.com. Big things to come, big trades to come. Get them now. Take care.